The year is 2025. The world watches as a trade war erupts between global superpowers. The United States, under the Trump administration, has imposed sweeping tariffs on imports from its North American neighbors, Canada and Mexico, and its economic rival, China. The tariffs, a form of economic protectionism, are taxes levied on goods entering a country. The Trump administration justifies these tariffs on the grounds of national security and economic interests. The U.S. aims to reduce its trade deficit, which is the difference between the value of its imports and exports. The administration argues that these tariffs will protect American jobs and industries from unfair competition. The U.S. imposed a 25% tariff on imports from Mexico and Canada. This tariff significantly impacts a wide range of goods from automobiles to agricultural products. The U.S. also targeted Canadian energy products with a 10% import duty, a move likely fueled by energy independence ambitions. China, a growing economic powerhouse, is also in the crosshairs. The U.S. doubled existing tariffs on Chinese imports to 20%, escalating existing tensions. These tariffs primarily target manufactured goods, a sector where China has become increasingly competitive globally. Canada, Mexico, and China wasted no time in responding to the U.S. tariffs. Each country retaliated with tariffs of their own, targeting strategically important American goods. This tit-for-tat exchange marked a significant escalation in the trade war, raising concerns about a full-blown global trade conflict. Canada, traditionally a close ally of the U.S., responded with tariffs on over $100 billion worth of American goods. The Canadian government carefully selected products with political significance, targeting industries in states seen as crucial to the Trump administration's electoral base. Mexico, a vital trading partner within the USMCA agreement, retaliated with tariffs on a range of U.S. goods. The Mexican government's response aimed to inflict economic pain on American industries while minimizing the damage to its own economy. China, already embroiled in a trade dispute with the United States, responded with tariffs of up to 15% on U.S. farm exports. This move was strategically calculated to hurt American farmers, a key constituency of the Trump administration, and gain leverage in trade negotiations. The trade war sent shockwaves through the global economy. Businesses and investors already grappling with uncertainty were thrown into disarray. The tariffs disrupted supply chains, increased costs for businesses, and fueled fears of inflation, ultimately impacting consumers worldwide. One of the immediate consequences of the trade war was market instability. Stock markets around the world tumbled as investors reacted to the escalating trade tensions. The uncertainty surrounding the trade war led to volatility in currency markets, making international trade more complex and unpredictable. The tariffs imposed by the U.S. and the retaliatory measures taken by its trading partners led to increased costs for businesses. American companies importing goods from China, Canada, and Mexico faced higher prices for raw materials, components, and finished products. These increased costs were often passed on to consumers in the form of higher prices, leading to inflation. The trade war had sector-specific consequences. The agricultural industry, particularly in the United States, was hit hard by China's retaliatory tariffs on agricultural products. The energy sector also felt the impact, with Canadian energy exports facing higher tariffs in the U.S. The manufacturing sector, heavily reliant on global supply chains, experienced disruptions and higher costs due to the trade war. The 2025 trade war has far-reaching implications for the future of international trade and global economic policies. The conflict signaled a shift towards protectionism and a move away from the free trade principles that have underpinned the global economy for decades. The trade war highlighted the interconnectedness of the global economy. The tariffs imposed by the U.S. not only impacted its immediate trading partners, but also reverberated throughout global supply chains, affecting businesses and consumers worldwide. The conflict also tested traditional alliances and could lead to a realignment of global trade relationships. As the U.S. retreated from multilateral trade agreements, other countries explored new partnerships and regional trade blocs. The trade war's long-term impact on global economic policies remains to be seen. However, the conflict serves as a stark reminder of the importance of international cooperation and the potential consequences of protectionist policies in an increasingly interconnected world.